Hey guys, what is up and welcome to a new Nvidia daily update video. So today, as per usual, let's go over Nvidia stock. Let's go over what the hell is happening to the stock, what we can expect moving forward, and all that good stuff. And you know, what is a pretty painful day in the market once again. The market has been definitely a little bit more volatile and a little bit more difficult to say the least for the most part. But yeah, I'll give you my thoughts moving forward. So as per usual, ladies and gentlemen, if you enjoyed, don't forget to hit that like button. This is not financial advice and I am not a financial advisor, but if you do enjoy my technical analysis, thoughts on the charts, updates, etc., I do share my thoughts, updates, etc. with my members every day the market is trading, as the market is trading, of course, in my YouTube membership. The link is down below. For just $3 a month, you get access to all my thoughts, post updates, etc., mainly on Tesla stock, sometimes other stocks as well, bonus stocks, if you will. Or for $5, you get access to everything I just said, plus Nvidia daily updates. But jumping into it, Nvidia unfortunately closing the day with another pretty painful day, down another 3% on the day, closing just shy of $136 per share, which compared to the market is pretty much in line with the market, right? More or less. Market down about 1.6% on QQQ. So the question, of course, is, well, what happens next, right? I mean, Nvidia has had a pretty substantial correction the past 3 days, assuming, of course, he bought at 153 or whatever this was. I still remember this when this happened. You know, a pretty substantial correction, right? Just from that high alone, I mean, essentially fresh all-time highs, technically speaking, all the way down to the low of today. In 3 days, it corrected over 12%. That's a pretty sizable drawdown pretty quickly. And sometimes Nvidia does like to do these kind of things, right? For instance, back when it had this fresh all-time highs here, massive drawdown, and then it found a decent bounce. And I think we're actually pretty close to this kind of bottoming bounce right here as well. So I'll go over why that is and what my personal thoughts are moving forward. So first and foremost, going on the daily chart, the thing I'll be pretty much watching for is this bottom trend line support, right? Ultimately, right? Because, you know, for the most part, we've been pretty much zigzagging between this general massive rising channel. So, you know, we already found that massive bounce over here. We had a pretty significant bounce, I would even argue, all the way from pretty much 130 roughly to 150. Nice, beautiful $20 rally, right? Pretty phenomenal stuff. And obviously now what we're doing is we're, well, correcting from that. Now, there's a few things I'd want to see happen, right? There, to make me, I guess, more, I don't know, confident, if you will, in the bullish thesis a little bit, right? I still think the bulls have the upper hand here, I do. But I'm not going to lie, it's less convincing. But the things that will make me continue to still hold that stance and potentially even get more convinced once again that the bulls continue to truly have the upper hand are these things, right? First and foremost, I want to see 137 roughly recaptured, right? That was the low of the day on Wednesday, right? About 137. I definitely want to see the yesterday or Wednesday's low recaptured essentially. I want to see that recaptured, and I want to see us get back above the middle line of the Bollinger Bands. That's the first step. That's what I really want to see. Like, that's, you know, the sooner the better, honestly, right? That's number one. Number two is I ideally want to see this kind of, you know, 134 level that we're back at once again. Remember, we had that bull flag into this 134 range, then we had a massive bounce. We're pretty much there again. So I mean, I continue to want to see this level hold 134-ish, right? Pretty important level. We did hold it today. Pretty nice looking rally from the bottom, which is good, right? I mean, it did follow the market, but nonetheless, still pretty good, right? So that's good. I like to see that, and I want to see that continue to hold 134. And, you know, maybe we'll get a slip down below it on Monday. I think they'll get potentially one more shakeout on Monday and or Tuesday, and I'll go over the market very quickly as well. I already did it in my Tesla video. I'll do it here again. So I do think there might be one more shakeout to the downside Monday and or Tuesday, you know, which could bring us intraday below 134, right? But as long as ideally we close above 134, I think there's still potential here for sure for the bulls, but not too far below us. If we do get that, you know, intraday downtrend, if you will, and breakdown, if you will, below 134, we do have this nice rising channel, bottom trend line support that is pretty much sitting, you know, if it happens to say Monday or Tuesday, at the very low 130s, right? Ultimately, at the very low 130s, that still remains to be a pretty important level. And that's the level I still want us to ultimately hold as well. So, you know, we're closer to what should be, in theory at least, a bottom than a top, right? Between 134 to pretty much 130 to 131. Like that $4-ish range should, in theory, of course, nothing is perfect. You never know. Maybe this falls apart. But that, in theory, should be a pretty powerful support. Like that should, you know, I'd be surprised if we break down below it. It would be pretty bad if we break down below it. That could be really bad for the markets as well. So let's see how that ultimately plays out. Of course, you know, like I mentioned, we had that bearish stochastic crossover, you know, and I did mention how I don't think that we're going to completely crash from it. And, you know, again, as long as we hold 134 to 130, I remain with that stance. But if we do lose pretty much 130, you know, things can potentially get a little bit less convincing for the bulls, or maybe even substantially less convincing for the bulls. I'm not going to lie, because that would just continue showing some pretty substantial weakness that would be hard to defend as a bull until, proven otherwise. But nonetheless, 134 to 130, I still view as a massive area of support. Ideally, we hold 134 and don't even go too much below that. That would be the ideal scenario. And even more ideal would be to recapture 137-ish dollars per share as well, with that middle Bollinger Band and of course Wednesday's low. I do want to see those levels recaptured as well. That would be ideal for sure. So that's kind of my overall thought process, to make things pretty simple, I would say. The weekly candles are looking okay, I guess. We are still technically getting rejected by this red trend line over here that, I drew not too long ago, right? That is still technically showing some pretty major rejections. So let's see how that ultimately plays out. Thankfully, we didn't get a closure below last week's low, because if we did, we would have printed a pretty spooky bearish engulfing candle on the weekly, which definitely could have been bad news. We didn't. We barely held on. So that's good. But, let's see how this week, next week plays out. We have CPI, of course, on Wednesday. We have PPI on Tuesday. But that's kind of my general perspective right now moving forward on Nvidia. The stochastic already crossed well below. But the thing is with these stochastics is a lot of people will see this stochastic crossover and they'll be like, wow, it's bearish, right? And it's going back down substantially, which, it could. It absolutely could. But you have to understand, right? The stock is, technically from its all-time highs, it's still down. What is this, like 12%, which is, decent. The stock has also pretty much done, I think, virtually nothing for the last, 6 months, I think it is, right? For 6 months, yeah, it's literally flat. It has done literally nothing for 6 months now. The biggest, mega cap stock I think it's still the biggest. I don't know if Apple's surpassed it yet, 3.3. Actually, Apple's the biggest. So Nvidia is, I think, second biggest now. But nonetheless, one of the big dogs, absolutely. It's done absolutely nothing for quite some time now. And I do think that, its time will come. Or at least I believe so. But nonetheless, that's kind of what I'm seeing, right? The weekly is still holding the EMA cloud. We're still above the middle Bollinger Band. Like the weekly still doesn't look too bad for me, despite the stochastic, of course, and MACD showing some weakness, which can just mean that maybe this, rally back up to truly break past all-time highs. Maybe, maybe it'll take a little bit longer, right? Maybe we'll get some more choppy action, sideways action for the most part, 130s to 140s, right? That could be still a thing that we get. But nonetheless, I still think the weekly chart doesn't look too bad. I really do. Because for instance, another argument you can make is the fact that, yeah, stochastic is bearish, but it was cross bearish all the way over here. And yeah, we had a correction, but we're kind of getting that right here, right now, right? Ever since the stochastic cross bearish here, we already had that correction. So you can make the argument, the fact that we're pretty much right here, right now, right? Because you can see it crossed bearish right here, right? Just like the way it crossed bearish around here, right? And then we had this drawdown, and then we had this drawdown, and then we had a bump, and then we had a bump. Pretty much at the same levels, and then we had one more drawdown, and now we're getting that one more drawdown right now, which maybe next week should be, hopefully, of course, fingers crossed, the last drawdown that we get before a pretty much rally like this. Like we could be essentially mimicking almost exactly this exact same pattern where the stochastic was looking virtually the exact same as well. Like this little situation here could be just a smaller kind of mini version of it as well, where it looks pretty identical in many aspects as well for the most part, right? So let's just see how this plays out moving forward, right? It's hard to say. The market's a bit finicky for sure. But speaking of the market, let's very quickly take a look at the market, which of course, naturally can, absolutely influence Nvidia. And I want to say pretty much exactly what I said about the market here that I did in the Tesla video. And that's going to be pretty much the fact that I think the market, despite I think, it may have 1 or 2 more days of a little bit of a painful day, a little bit of a drawdown, et cetera, et cetera, et cetera. So for instance, I think SPY can maybe make another, close to 1% drawdown. I do think the market is getting closer to a bottom than a top here, ultimately. Why is that? Because, well, yeah, the bands are red, these bands right here are red, but they've been red back here before, and yeah, it was painful for a little bit, but then we snapped back very aggressively back above when everyone was screaming for the world to end, right? And right now the vibes, if you will, in the market and the sentiment, I would say, around people and the market, it feels very negative. Like people, it feels like there's a lot of fear right now, and I think there is, and honestly, rightfully so. It is a bit of a scary market right now, right? At least it feels scary. But the point I'm trying to make here is this: the Bollinger Bands with the indices SPY, QQQ are really powerful, man. Like I really think they're really, really powerful. So if I just zoom out like this, how many times has the market come down to the bottom of the Bollinger Band and not overall found a bounce, right? Now, yeah, naturally, sometimes it can hug the red line a little bit longer than expected, but the point is the fact that it doesn't usually hug the red line very long before finding a bounce, right? And if I just zoom out like this, you can see how many times, like, yes, you have these anomalies here back when the market was honestly, for the most part, in a bear market, sure. But other than those, kind of, more rare instances, we don't usually come down. Like how many times do we just rally without barely even touching the bottom bands, right? We touched it here, for instance, and then we rallied, then we touched it here and we rallied. We touched it even here not that long ago, and we still got that nice little pop for the most part, right? And now we're pretty much back at it once again as well, right? And the point I'm trying to make here is with the indices, when you get to the bottom Bollinger Band, you're touching it like the way we are right now, yeah, we could get a little bit more room to the downside, but you're probably closer to the bottom, or at least a temporary bottom, than you are to, a top, essentially, is what I'm trying to say, right? So again, nothing is perfect. The market is difficult for sure. It's a difficult read, but SPY and QQQ, they both have that similar look. And you can even argue that QQQ actually looks arguably not that bad, because you can make an argument the fact that we're essentially consolidating into what could be a falling wedge type, bullish wedge, into what was obviously an area of old supply and resistance with the previous all-time highs over here. And now we're essentially nice little breakout, consolidating back into it, and a potential continuation. That is a possibility as well. So let's just see how this all plays out, right? Let's see how this all plays out. But the reason I bring this up is because Nvidia, absolutely can get affected by the market for the most part, right? As you can see today, it pretty much followed the market almost exactly to its, relative movement to the to QQQ. So yeah, I don't know. It's a tough read. I'm not gonna lie. The market's a little bit difficult right now for sure. But just strictly, I'm trying to when the market gets hard to read, I try to eliminate as much noise as possible. And ultimately, if I had to eliminate all the noise, I'd probably only trade off of the Bollinger Bands. I probably wouldn't even use trend lines. I honestly probably would literally just put on the bands, the Bollinger Bands. And if I ever see it start hugging the red line, I start selling cash secured puts. If it's a stock I really like, I'll even enter a light position, sell cash secured puts, and just forget about it, right? And if I get, filled, I'm probably getting filled at a pretty damn good discount. Otherwise, hey, it is what it is, right? And you just kind of move forward with that. That's probably the way I would trade most of my trades. And, you don't even need trend lines, nothing. That's probably ultimately all you really ultimately need. And yeah. So anyway, that's kind of the point I wanted to just really kind of across a little bit on the market, because it is pretty doom and gloom, it feels like right now. A lot of people feel, I don't know, people feel like the market's about to crash again. I feel like people always think that before the market finds a bottom. And I could be wrong. But I do think that we're definitely closer to a bottom than a top. So for instance, I think QQQ might have one more drawdown Monday, Tuesday before PPI/CPI comes in, closer to $500 per share. And I think SPY could potentially make its way closer to about 575, roughly, something like that. But I don't think we'll go that much lower than that without at least some bottom here, at least a temporary bounce at minimum. But anyways, that's my thoughts. Let me know what you think, and I'll see you on Monday. Peace.